Meantime, let's switch to Tesla. The stock is revving up. Shares rallying over 5% today, bringing its gains to an astonishing 68% for the year. And it's only February. The EV maker is holding its investor day on Wednesday at its Gigafactory in Austin. So what role are options and retail investors playing in this big run? Before we get to that, Tim, what are we expecting, do you think? I mean, we could be getting updates on its battery 4680 battery technology, operating margins, a cheaper model.
Well, there are things that will move the needle to the upside, and the risk reward to me we'll get to. But I think the things that would be the excitement and the fireworks are certainly around a Model 2, which was the affordable, the mass market car, really, that would be the global car, battery dynamics, and then even some update on China. I think the China demand thing has been very misunderstood at times because China has been down. There's been some sense, or demand or backlogs have been down. There's been some sense that China demand has fallen off the charts. But I mean, the stocks rallied massively.
Yeah, and its volumes are, I mean, the discounts, Mike, have really worked.
Well, yeah, I mean, that's the interesting thing. We talk about a global car, a value price car. The interesting thing is that now that they've discounted the prices and we are seeing, their eligibility for that federal tax credit return, the Model 3, which is their current entry-level car, actually is quite competitive with the average car price sold in the United States right now. You're not talking about an immensely expensive car if you're talking about that one. Obviously, you get up to the Model S Plaid and things like that. That's a much more expensive vehicle. But the car maker is accessible to, we'll call it average to upper middle class households if they're interested in buying one. But I will also say that there's inventory build, and I can see it on the lots.
Let's get more now from CNBC contributor Gunjan Banerjee. She is the lead writer for the Wall Street Journal's live markets coverage. Gunjan, great to have you with us. You've written about Tesla extensively for the year, and the boom in options has been just astronomical. The role of the retail investor, though, in this ramp up has been pronounced, hasn't it?
So true, Melissa. And what a tear this stock has been on, as you said, up almost 70%. We're seeing during this run is that individual investors have doubled down on the stock. It is by far the most popular buy among individual investors. That's according to some Vanda research data as of this year. And single-day purchases of the stock hit a record this year. So as Tesla recorded one of its worst years on record, you saw individuals say, hey, I'm going to double down. I'm going to buy the dip in Tesla shares. And so far, it's paid off this year.
In terms of the activity going to the investor meeting, I would imagine, like so many investors out there, they're expecting that Elon Musk will have some sort of rabbit to pull out of the hat. Regardless of how many rabbits or the size of the rabbit,
he's always got one.
He's always a
rabbit.
Right?
He's a couple.
So the expectation is a run up into the event, and then it's a sell the news event. I mean, I think that's sort of the consensus at this point. Is that what you are seeing in the options market?
What was really fascinating today, while the stock jumped, 5-6%, is a lot of the most popular trades were those tied to the stock jumping even more through Friday. These were 220 calls, 225 calls. So that shows you that many investors were turning to the options market to bet on a continued rally in Tesla shares. And let's not forget, Tesla calls have been one of the most popular trades in the entire options market. Tesla options, that market has just grown tremendously this year. People have spent more than $500 billion on Tesla options over the past year, making it the most popular option in the entire market. And that was certainly on display today while the stock was ripping higher.
Especially while shorts are down, $7.5 billion in this calendar year, depending on how you're measuring that. But I mean, that's the other side of this. It's been a painful place for the shorts.
Definitely. After a rare win for the shorts last year, that seemed to be short-lived for sure.
I mean, this seems almost, obviously Tesla's way too big to be one, but it seems almost like a meme stock. I'm just wondering, Gunjan, when you talk to people and you're reporting, does the opinion of investors of the durability of Tesla's rally, does it change at all, knowing that there's such a fervent retail base?
Yeah, I think that's what makes it such a tough stock for individual and institutional traders to value, right? And that's what made it such a painful short, because I do think many bearish investors underestimated that passionate camp. And what I hear from investors I speak with is, hey, this is the next Apple. The Tesla car is like the iPhone, and I'm not selling, even though the stock had its worst year on record. So I think that makes it a very, very tricky trade for many institutional investors. But it's part of what makes so many individual investors very enthusiastic about the stock, because they have this community of traders. That's kind of having diamond hands alongside them.
Gunjan, thank you. Great to have you with us.
Thank you.
Gunjan Banerjee of the Wall Street Journal. Guy, does it change your view? I mean, not only is there a really loyal and fervent retail shareholder base, but you know, S&P Global Mobility had a survey out showing that its owners, Tesla owners, are extremely loyal, and that whatever brand damage Elon Musk has done with his escapades over the past year, let's put it that way, may have been overcome at this point.
Yeah, I mean, there's no doubt that their current owners are loyal, but you know what they need are new owners, right? They need to continue to grow. It's a $650 billion company, and the loyalty that people have had to the stock, well, you know, they were loyal on the way from where the stock traded up to $450 or so in November of 21 down to $100. I mean, that tested their loyalty, and the stock, even with this 100% run, is still 50% or so from its all-time high. So keep things in perspective here. 225 was the moving average. 200-day, we got up to there. Again, you know, I'm more the camp that we sort of gravitate back down towards 165, which is a 50% or so retracement from this move, and we'll see.
Yeah, I think the technicals and momentum that you're referring to, Guy, are really what are going to lead the trading in the stock. And, you know, it's an age-old question whether or not valuation matters. And I would say it does unless you're trading Tesla or the meme stocks, right? Like those seem to be absent of valuation in terms of, you know, the investing decisions that are going in from the retail community. What I will say is what you are seeing is retail traders becoming more proficient in the use of options. So I think what that may set up for is actually a situation where the institutions finally are able to trade this from a profitable way. Even if they're not getting the direction right, it will likely lead to dislocations and implied volatility, and that's honestly where the institutional investor likely has an advantage.